All right, Quasar Markets Live. We've all asked for him. Jim Iorio, unfiltered investor. I've been listening to you all week. Saw you yesterday on your show. What you nailed it again, Jim. It's what kind of a market are we actually in right now?
So the fundamental part of it is pretty interesting because I personally think that the labor market is somewhat falling apart, as evidenced by the really, really poor ADP number. Was that yesterday? Today's Thursday. Yeah, yesterday morning. And I think that's the thing that scares Jay Powell, and that's why he's easing. He's easing into markets close to record highs. The deregulation coming in 2026, the biggest technology boom, the biggest disrupting technology, probably the second biggest in history if you count the internet as number one. All these things are lining up on the positive side, but that AI thing is affecting the labor market as well. So he thinks he's got to throw liquidity into the system to address the labor market. So the whole cocktail of it is somewhat buoyant for equities and for metals too. And that's one of the reasons that gold and silver have gone through the roof.
Yeah, and this last week I've been holding silver since 1950. That's when I started buying ounces. And I sold this week at 58.50. Am I right or wrong here, Jim?
Well, so if the pullback was right, was definitely right for a pullback. We talked about it on yesterday's show with our technical analyst, Mike Arnold, and he thinks, pullback, I think he said to about 56.5, 57. I still think the fundamental story still favors silver. Agreed. But when it goes along, in 2 months, it rallied 50%. Now, it was a really, really interesting rally because the market wants us to believe that, we were switching from just the precious thing, the debasement trade, to an electrification trade with AI data centers and platinum and palladium 1 higher tour. I think that the debasement trade is the bigger driver of this. And they just, how the market kind of fills in the backstory as things are starting to rally to beat the band.
Right.
Silver didn't become twice as high demand in 2 months' time, but it went through the roof. And I'm still going to hold silver.
And my first worst trade ever in the NYMEX was high-grade copper. So I stay away from copper, but Dr. Copper seems to be a little bit moving again. What do you think about copper here right now?
Nice. So I still like copper, and it never really came back from that huge sell-off it had a couple months back. And it's only chewed back about a quarter of the way, maybe it's close to half the way. So I'm not ready. I'm still quite long it now through some proxies. Okay. And I believe that it is the right place to be long-term because I believe the electrification story is real. And consider this too. When Donald Trump became president, the whole net zero mandate for electric cars, that went out the window. And that was a big driver of copper. But soon the market realized that AI data centers, crypto mining, these things are wildly energy intensive, and most of it is electrification. So these things need to be owned as well. I think the energy trade and the cousins of the energy trade, which is the metals conductivity trade, is still a good trade.
Yeah, and the two things I like about copper and lumber at this point, and I've been looking at this as mortgage rates have come down to the lowest rates since COVID. Here we go, right?
So the lumber is interesting to me because I think the lumber now is a play on, like you said, on interest rates. So if you think that the 10-year is going down to 3.8 like I do, then this lumber slide, it's been a long slide, should be arrested somewhat. I was looking at trades yesterday and because just basically based on the same thinking as you were, that rates have come down quite a bit. Perhaps it's time to get in. I don't see any technical setups yet, but fundamentally, I really like where your head is, but I haven't bought anything yet. And by the way, so I'm looking at Weyerhaeuser, the equity that has lumber. That's pretty much it. Where else would you do it? There's not really that great a futures contract in lumber, is there?
No, but I do like the ETFs of it. I'm actually going to pull some of that up. I love that you brought that up. I'm going to do that now. And I like Weyerhaeuser. Although when I was in University of Illinois, my professor asked me to do Weyerhaeuser and talk about Weyerhaeuser, and he did not like my thesis on Weyerhaeuser. My thesis back then, and that was a long time ago, was because I thought that there's always that issue between Canada and the United States. Right. And we still have that issue, right? So you're seeing Weyerhaeuser now at 21.33. You can look at lumber here at the charts. You can pull up lumber charts here on a daily. I think we can pull up a monthly chart so you get a better feel for it. Lumber prices are very, very cheap right now. This is just outrageously cheap.
Yeah. So if I gun to my head and I had to take a side, I'd say rather long than short, just because of the relative value for it being that cheap. And we've seen it be extremely volatile, in 2020 and 2021. So I think that is an interesting trade. Like I said, I haven't seen anything that confirms my entry yet. What do you got there? Is that a monthly?
Yeah, that's a monthly chart on lumber.
Yeah. So look at it again. It doesn't look great yet. It looks like it broke out of those series of low months, so it might have room to go lower. But I still like the fundamental story. But again, for the guys who are watching, Bobby and I think that Stephen is somewhat similar in our camp. Is that fundamentals can be a large part of your thinking. For us, it's probably about 30-35%. But if the chart doesn't give us a signal to jump in, we won't jump in. You trade the same way, right?
Yes, correct.
Yeah. So yeah, I don't see anything yet that I like. You see what I see, right? All those lows breaking 2 months ago, and then,
yeah. For those of you who don't know, Jim here is Unfiltered Investor Newsletter. Make sure you guys sign up for that. He's been crushing it here. I mean, look, Jim's been 30 longer than I have actually in the market. So he's been doing the podcast, but Unfiltered is his new home, and I love that. All right, well, let's get to it. We talked about silver a little bit. That silver you just said. This is why I don't like it. It just seems
I'm not buying that.
Right there. Right? I sold it early part of this week here.
Yeah. And again, that I've been accused of being a gold bug and a silver bug. At the first week of November, I gave a speech in New Orleans about, how owning physical metals is now the trade, in my opinion, because the moves higher from here are almost kind of scary. Well, that's kind of a scary move. That is a shot. And I'm not chasing that shit. If I had to put a trade here, and I may, as soon as we hang up, put some hedges on my long silver position, because I'm quite long silver, and it's been a great trade. And it's all part of my debasement, poor stewardship of the US dollar portfolio, which is silver, gold, platinum, Bitcoin, real estate. And tech stocks. Really, tech stocks belong in that as well. But that silver, I'm not chasing that thing. It's a good move selling some of that out.
QQQ, same situation. I think it's a little heavy now. I mean, a couple of weeks ago, I was talking about Schwab Network, and I said, I don't like NVIDIA up here. Sold it and bought it back, and then I've sold it again. I think that's part of what's going on in the market right now. And Jim, it just seems like there's no real direction right now.
Right, I agree. And the one thing that's very, very interesting, because you mentioned NVIDIA, but the Google-NVIDIA relationship, and I know that the headline is, that Google has the TPU chip, which is a rival to NVIDIA's. Some say that news was out over the summer, and the market didn't really react to it as much as it is now. But it seems like a changing of the guard. The one thing I will say is that prior to the Google move higher, I really believed, and still to some degree believe, that the tech names are so stretched that they are due for some sort of 30% correction in the next year and a half. I know I've said that quite a bit, and it hasn't come to fruition yet. But I think that Google kind of saved the day by stepping in to grab the torch 2 weeks ago, 3 weeks ago, whenever that was. And the Google NVIDIA trade is fascinating, because I am quite long Google. You know why I'm long Google, right? We've talked about it before. I'm crazy conspiracy theorist that 7 years ago I realized that Google was just an arm of the CIA. So I basically bought as much of it as I could.
I mean, I don't have a problem with that, right? I mean, Palantir is another example of that, right? If you've got the goddamn contracts, you might as well take the money too, right?
If you and I were head of the intelligence community in this country, and we wouldn't let other companies, private companies, collect intel better than we did. Of course, it's part of the game. So I'm long Google because is that Google?
And for those of you out there that do know, I was part of that side of it, so I don't believe in conspiracy theories. I tell you what I do like about Google is that Google and Amazon have got a partnership now. So that we don't see the world going down as much as the market's going down. Google now says if they go down, then AWS can pick it up, and AWS goes down, then Google can pick it up to the cloud. So I kind of like that partnership, right?
Yeah, that's a big deal. And again, I'm long Amazon as well too. And I think that's a great thing. And again, what's really interesting in bull markets is that, and we saw this with the open AI thing, anytime these companies come in with any sort of strategic partnership, the both names seem to go through the roof. And right now, I think that just underscores the buoyancy, the ebullience, the good mood of the markets.
All right. Well, Mr. Conspiracy Theorist, then let's talk about...
It's not that crazy, though. Tell me, be honest for a second. It's not that crazy to think that the CIA would be keenly interested in a company that all they do is collect data.
That's right. And, I think DARPA does a good job of collecting that data, right? And you put sticky fingers, Mr. Conspiracy Theorist himself, Mr. Elon Musk, into Doge and right into the system, and here's Tesla now near the highs of the year now. 52
there's a conspiracy. There's a conspiracy theorist. Now, I'm in Tesla for the self-driving capabilities. One of the reasons I was in Google as well. And I think it's a huge story going forward. But yeah, to see how it's rallied with Elon Musk's strategic partnership with the government, it seems it raises an eyebrow or two. Yeah.
Okay, well then, where are we at now with Tesla? I mean, he got his $1 trillion that he wanted. I can't even believe I'm saying that as a CEO getting $1 trillion. But
wow,
where are we at? Is this the top here? Or are we going?
I mean, you see all that congestion there. I think the path ahead is fraught with a lot of overhang supply. I mean, we've seen the from a month ago, those highs I think are going to be hard to go through. So if I had to do anything in that, and again, I'm long it, I'm probably not hedging or getting out because I think it's a good long-term play. But realistically, I think the next few percentage points to the upside are going to be some tough sledding, and a pullback is probably a little more likely.
Yeah, and I'm going to throw a little bit of a curveball. I don't normally do that with you, Jim, but you I know you can handle it. Biotech stocks. Are you into biotech stocks?
No, but I'm into charts. Let's look at the charts.
All right, here's my boy CRISPR. I've been buying for the last week here. I like this move here on CRISPR.
Hell yeah, it's a clear bottoming pattern and a clear breakout. I see nothing wrong with that pattern at all too. I know we looked at it yesterday in Trader's Edge with Mike Arnold, and he saw some things on the upside. There was a 50 EMA and a 200 simple that were all going to provide some resistance on the upside. But if you just look at that chart, it's pretty obvious. It went down to a level that was clear importance, traded there for a couple of weeks, and then broke out of it. I like it.
Yeah, I'm gonna throw another one at you too. Our company's been looking at, well, I should say Howard Greenberg and I have been buying Fly as well for the for NASA and landing stuff on the moon here. Another chart that we both like. It broke out to the upside as well.
Yeah, it broke up the upside too. It's not as strong a signal from as long a chart as before. I still think the path to that. So the red green candle from just about 6 candles ago. Are we above that high? The highs from those? Yeah, right in there.
Yes,
we are already. Yes,
breakout.
A settlement above there on this bar, and then any kind of subsequent strength the next day, I think would be a nice shot in the arm for that. Just maybe to trade up to those bigger candles that are next to those, maybe the high that red one right there. I like how you know exactly what I'm talking about, even though I say it cryptic.
We're old school. We're old school. I get it. Institutional side of us. All right. I've been watching, and I finished it, Stranger Things. I'm looking forward to the end of the year. Netflix is in the wrangle for Warner Brothers WBD and says they can buy WBD with 85% of their cash. They don't even need anything. Right.
That chart does nothing for me yet. That seems negative to me. I'm not ready to buy that yet. By the way, I was going to say I've never owned Netflix, which that cannot be true. I'm sure that I've owned Netflix at some point in time, but it's just never a story that excites me very, very much. I know that streaming is the thing, but there's a lot of competition within the space, and there's nobody that ever seemed like a clear winner. So I was never a big fan of the name fundamentally, and that chart doesn't look ready for me yet. Not saying anyone else, maybe someone else has different technology, tech systems, but for me, it doesn't look good yet.
Yeah, and that split 10-for-1 split back on the 17th last month gave it a bit of a pop, but then people realized, well, it doesn't do anything for you. It just makes it easier for retail to buy it. Okay. And they had in mind
splits still give you a bid. It just seems so, it's funny to me. Yes.
It's crazy. And I'll give you one more before we leave here. I'm going to go with Royal Caribbean here, RCL. I'm a cruiser. My wife and I do cruise, and it seems to be weak, but it's also holding here too as well.
It's holding there. So here, the way I would trade this, to me, again, I went on a cruise once about 8 years ago, and I wanted to hate it because I didn't want to be a cruise person. I absolutely loved it. I went with like 6 other couples, and they're like, oh, he wants to hate it so bad. I'm still fun when I want to hate it. That chart, I still think a little more weakness, and I think that triggers a better entry point for you because I think it trades back down to those recent lows right there.
I agree. My buy order is at 250, so I like that one.
Okay, but good. Yeah, that's where I would consider that too.
Still a few gaps in here that I don't like so much, but they're not been filled yet. There's a big one up here that hasn't been filled at 278, so I kind of like that.
That's the good one. That's the one that'll make you money, right?
All right, let's get off the charts. Let's get back to real life, and I have to ask. And before you do that, I want everybody to click on that button. You see the button? I've got it up there in front of you. Unfiltered Investor Beehive. Look, click on that button. Sign up for I know these guys personally. These guys know their shit. So sign up, and please sign up. All right. The big talk is one guy, Jay Powell.
Yeah.
I mean, Jay Powell, J Powell. I don't think I've heard anything but Jay Powell.
Right.
What's going to happen next week?
I think he's backed into a corner, and I think he feels that he has to ease. Every one of us has been talking about the massive K-shaped recovery, and it's real. Okay. The 30% of the people in this country who own the assets are doing just great, and they're driving all the spending. The 60% who have no assets are struggling mightily.
How much are they actually struggling? I've been saying they've been really struggling. But you see the government saying, well, maybe not that much, or, you know.
Guys like me and you, I think, could come up with a better opinion than the government. You know, I'm not too happy with the way they assess things. And they always say that things are fine. Remember, the last administration kept telling everyone that, hey, you guys shouldn't trust your own eyes. Trust us. Things are going great. And I think that people who aren't asset holders have a difficult time. And one thing I will say is that, have you seen the chart of sentiment numbers like Michigan sentiment juxtaposed against equity markets, like just say like the NASDAQ? Normally those things are highly correlated. Sentiment goes up when equities go up. Now they've gone completely inverse correlation. And I don't think it's in spite of equities going up. I think it's because of equities going up. I think the people who don't own assets are getting pissed because they believe the game is slanted against them. And by the way, I will say without any hesitation at all, the game is slanted against them. That Jay Powell made a decision to bail out indebted governments and cause inflation, and he did not care one bit who it was going to affect, and kind of hoped that the government would get them on the back end. But the fact that sentiment numbers are going down at the time when equities are going higher is highly unusual.
I mean, consumer sentiment right now, Michigan consumer sentiment is now 53.6. We're about to be a contraction.
Yeah, right. What'd you say? It might be in a contraction? Yeah.
53.6 right now. I mean, it's where we're at now, right?
Yeah.
I mean,
that's
get really bad.
That's not a good looking chart. Yeah.
Right. I mean, we're talking about the bad 80s, right? We're talking about .com. We're talking about 08, 09 when the world was really falling apart. We're actually near 08, 09 when that was 57, 56. We're below that right now.
Yeah. And this is a huge, huge deal. And I don't think it's being talked about enough. You know, Mike Green's Substack that went so virally about 140,000 being the new poverty line for a family of four, which I don't think is necessarily true. But I will say this is that the fact that it went so crazy viral and everyone's talking about it kind of underscores the point. There is a belief in this country that the rich are getting richer and the poor are struggling, or the working poor or the middle class, whatever that is now, is having a very, very difficult time. And I think there's two elements to that story. One, I think it's real, but that's not that important. What's more real is the belief that it's real and it could cause unrest. And it already has, with a avowed socialist winning in New York. And then some of the things that are coming out of California, which are absolutely absurd as well, like retroactively taxing billionaires 5% on their money.
I don't understand
that. There's some unsettling headlines that I'm reading that I do not love.
That is terrible. I mean, and for me, one of the biggest, you like consumer sentiment. I like Dollar General as one that tells me what's going on in the world. If people are buying at Dollar General and they're saying that their net income rose 43.8%, look at that stock price. It's over the limits here.
It exploded higher. So do you think, is that a contra indicator to the economy?
Yeah, I think it tells you exactly what's going on in the economy. I think people are going to spending less money and they're going to Dollar General to buy as opposed to
too. Yeah.
The other one that I bought today was Costco.
I love Costco as a company, and it seems to be coming into some serious support there. And I think if it's a long-term hold and you're getting it at these levels, I think it's probably a good thing. As a trade, I'd wait for a better buy setup, but I think Costco is amazing.
And the last one, I'll give you one more. Meta, Facebook. Good old Mark Zuckerberg has been spending money like water, like a drunken sailor, and Shore on. 2 years ago, he said it was the metaverse. Stock went to 90 under 100. And then he says, well, no, I think it's AI. And he did well there. And he spent. And now he's cutting back on metaverse. And now he's spending it all on AI. And I just went to go see the new metaverse, the new Meta glasses. And I want to pull up a weekly chart now. This was that big craziness, what he was talking about when he was in the metaverse. But now he's back to it. Is this, are we going back up with good old Mark? Is he going to buy another island in Honolulu?
It seems to me that chart is poised to start heading higher. You know, on the longer term, a series of higher highs, a series of lower lows. Yeah, to me, it seems like that's a great line that you just draw in. I want to see it settle above that line, and then I think it's off to the races. The fundamental story I think is interesting is that, it turns out that grown people don't want to spend their time in a make-believe world. That was all asinine that was going to be such a huge deal. So I think people like the real world. So I think that that it's going to come out of that and go higher.
You know, I was on a podcast yesterday, Jim, and they asked about the future, like, what's the future look like? Tell me a little bit, Steve, what does it look like for the future? And I said, in the future, y'all want to hear me talk about technology. Y'all want to hear me talk about, the metaverse or whatever. To me, I think we're going to go back to normal trading. I think we're going to be oversaturated with computers, oversaturated with technology, and we're going to get back to the psychology. And I think algorithms will be a thing of the past in 10 years. Not 5, but in 10 years.
Yeah, I love what you're saying. There is some changes that I want to see. I'm welcoming of self-driving automobiles. Again, if there's a person dies in this country once every 12 minutes in a car accident, we as a species are awful drivers, and getting that would be a great thing. But as far as AI revamping and doing everything for us, I don't believe that either. Our life is going to change. But is it going to change to the degree that people that you're just going to walk around with these glasses on and say something and it appears? I think that's mostly bullshit. People like going to stores and looking at things. People like going to restaurants and sitting down and talking to people, going on walks, going out in nature. So again, people shouldn't get too hyped about it. I am worried about the way it's affecting the labor market right now. And part of that isn't necessarily that it's really going to destroy the labor market, but I think there's a lot of companies who think that AI, they can parlay AI into great productivity and they don't need to hire as many people. They may turn out being wrong, but right now I think it's hurting. Yeah.
And I can't wait when those robots are driving us around through Waymo after a few nights at Series of the CBOT, and we'll take off and we'll take us home, right?
After a night at Series, now once I've passed out in the back seat of that car, how will the robot take me into my house? That part I don't know.
I mean, it's gonna be your home robot that says, she's cleaning the floor,
the car, right?
She's got you by the back of the neck and putting you into bed. As always, guys, literally sign up for Unfiltered Investor. Go see the guys. Jim is right there. I'm gonna pull up one more time. But Jim, as always, thank you so much for being on the show. I'm gonna give you his link as well one more time, and you guys can go see him as well. Also, I will tell you one more thing before I let Jim go. Jim, did you have a good Thanksgiving?
Yeah, I had a great Thanksgiving. Too much driving, but we had a ton of fun. Yeah, you?
I love it. Always with family. All right, Jim. We'll see you next week, my man.
I booked 3 weeks in the Keys, February into March. I'm going back down for some blue water, some paddle.
All right, let me know, and I'll come see you. I'll come fly down for him.
Sounds fantastic.
All right, Jim. See you next week.
See you, brother.